Hi, everyone. Are global market shifts and the future of the US dollar weighing on your mind? You've worked hard for your wealth, and concerns about economic uncertainty are completely understandable. Many of our viewers, just like you, are looking for true peace of mind and lasting security. That's why tangible assets like physical gold and silver are becoming a crucial choice for wealth protection and legacy preservation. If you're thinking about how gold and silver could help safeguard your retirement, we invite you to take the next step. At ITM Trading, trusted for almost 30 years, we're here to provide clear, honest information. So take advantage of our free, no obligation consultation with one of our experienced analysts. It's a friendly conversation to explore your options, answer questions, and see if precious metals fits your goals. Call us or visit DannyReport.com to schedule your time. President Donald Trump urging Fed Reserve Chairman Jerome Powell to cut interest rates after ADP reported its lowest monthly private sector jobs numbers in years, and the ECB cutting its key interest rate to the lowest level since early 2023. The move deepens a divergence with the US, with benchmark borrowing costs now more than 2 percentage points lower in Europe. That gap has become ammunition for Trump's criticism of the Federal Reserve, which hasn't cut rates this year so far. So what is the Fed to do? Joining me today is former Fed insider Danielle DiMartino Booth. Danielle, always good to see you. Welcome back.
Great to be here with you today. We couldn't have any better timing.
Absolutely. Well, here's the million-dollar question. We know that Powell met with Trump privately last week. Will he cave to the pressure here? I mean, he has the new moniker, Too Late Powell. Is he going to cave?
I don't think Jay Powell is going to cave to President Trump. If that was going to happen, it would have happened long ago. But I have been highly critical of Jerome Powell for really playing the same game as Trump. We've seen, according to Macro Edge, we've seen 4 months in a row of layoffs, mainly in the private sector, north of 100,000. The bankruptcy cycle is roaring on, taking victims as it goes and casualties as it continues to rise. Inflation is not problematic at all. We've got Trueflation, TRU, at 1.88%. The biggest input to CPI, which is shelter. We just had two of the biggest home price indices, S&P CoreLogic and FHFA, print negative month over month for the first time since early 2022. And companies are saying, Procter and Gamble's announced 7,000 layoffs at its corporate headquarters. It's clear that if you're selling gain, you're doing better than if you're trying to sell Tide. Dollar General has come out and said, you know what, people are trading down to our store who make north of $100,000. Their incomes, higher income people are trading down. It's quite clear that inflation adjusted wages are under pressure and that inflation is not problematic. I think it's time for Jerome Powell to put on his big boy pants and say so, and say, you know what, we've got two mandates. Inflation's one of them and employment is the other. And right now, employment is the overarching concern for the US economy.
Danielle, the comment section is going to blow up with that. So please explain. When you say inflation is not problematic, folks are going to be like, whoa, where are you living, Danielle?
Let them say what they want. I mean, I cut my electronic coupons. My grocery bill is lower than it was a year ago. I'm highly price sensitive myself, always have been. I've always been a very frugal, thoughtful shopper. Gas prices are down appreciably. Rents are falling. Home prices are falling in a majority of U.S. metros. Shelter inflation is by far the largest input to any inflation metric. And the bigger problem here, again, is that people are losing their jobs. And companies are saying, in no uncertain terms, we don't have pricing power. And why don't companies have pricing power? Because U.S. consumers don't have purchasing power. People can be critical and worried about inflation all they want. But in 2018, the CPI was 2.4%. In 2019, the CPI was 1.8%. And you know what? Jay Powell knows that trade wars are much more of a drag on GDP than they are upward pressure inflationary. And that's exactly what we're seeing today.
So when you say he's playing games, right, the same game as Trump, what do you want? What would you like to see Powell do here, Danielle?
I would like to see Powell open his mouth and be as articulate and communicative as he's demonstrated he's capable of being when he's in the press conference. I want for Powell to say, the Federal Reserve is mandated to quote unquote make monetary policy in the public interest. And if it's the public that they're making policy for, and not just the top 1%, where asset price inflation has benefited that top 1%, where high interest rates have benefited those with the wherewithal to have lots of cash sitting aside that they're putting in 4.5% CDs. I need for him to say, I recognize that now that inflation is not the bigger problem, but that you're losing your job is.
Yeah.
So I am making
Yep.
monetary policy for you. I am not crumbling to the will of Donald Donald Trump. There was a Trumpian slip. I am not bending to the will of the president. I am making monetary policy for you. And I'm adamantly clear about saying I've been data dependent and the data are telling me what to do.
I want to bring up Ray Dalio. You know, he's been making the rounds with his latest book. He had a good interview on CNBC yesterday, and he was hammering home this point, Danielle, that I wanted to bring up with you. He says you can't unnaturally lower interest rates without negative consequences. Unnaturally lower interest rates without negative consequences. I thought that was an interesting statement. He went on to say if you change supply demand to lower interest rates, that's a better way of doing it. You don't get richer by printing more money. That's music to my ears. What do you make of his statement?
I think Ray Dalio is spot on. Look, the Federal Reserve for a decade prior to the pandemic had this 2% inflation target. And even when they were pumping out zero interest rate monetary policy, printing money to kingdom come, quantitative easing as far as the eye could see, Ben Bernanke managed to hit that 2% target in 11 months, only 11 months in a decade. Why? Because the monetary policy, the quantitative easing, the money printing, the zero interest rate policy, that was simply benefiting the wealthy and encouraging speculative behavior. But the old adage goes, you can bring a horse to water, you cannot make it drink. So the people who needed to benefit theoretically from zero interest rate policy and from artificially repressed interest rates, they weren't on the receiving end of that policy. Their credit card rates, just like today, were maintained at very high levels. They didn't have access to the zero interest rate that corporate America or the wealthiest private equity investors had access to. It wasn't filtering through to them because banks weren't extending the credit. And that's the takeaway from what Dalio said. Artificially repressing interest rates never ends well. If you're looking at supply and demand, and right now we see that supply is overwhelming demand because people's inflation adjusted earnings have been declining since September of 2024. This is when Jay Powell says, I've seen a shift in the supply demand curve, and it's telling me to lower interest rates.
Makes a lot of sense. Switching gears here, I mean, Ray Dalio was also hammering home how we need to deal with the debt spiral, as he calls it. You also saw Elon Musk ramping up his attacks against the massive tax cut bill that Trump has pushed into Congress. He's claiming it will condemn America to debt slavery and urging lawmakers to kill the bill. So 2 points here. Is Elon Musk correct on his criticism that it will just really, blow up the whole debt cycle here?
I think Elon Musk is, and I think that Moody's and Deutsche Bank would agree with him, as opposed to the Congressional Budget Office, which seems to be the only entity that is suggesting that tariffs are going to create enough revenue to offset the increase in deficit spending. I think what's more problematic that nobody's speaking about right now is that the majority of this bill is simply extending existing tax policy. So the bill is going to raise deficits, right? This gravy train was supposed to end at the end of 2025. But by expending that effective fiscal largesse, you're not stimulating the US economy. You're simply preventing a negative shock to the system. But when the legislation was originally made, it was supposed to be temporary in nature to satisfy an emergency in the economy, not be something that was perpetual in nature that would forever increase US deficits and debt. And that is what we're talking about. But again, it's just going to prevent a negative shock to the system, while at the same time not provide any stimulus, any means by which you're encouraging the private sector to create jobs. And that's what you need to be doing at this juncture if you're Congress.
And to Dalio's point, I mean, when he was asked how urgent is it that we deal with the debt situation, I mean, right now he's ringing the alarm bell. He's saying, like, now we need to deal with it now. I'm safe to assume you agree with him on that point as well. Yeah.
Look, okay, so it hasn't been in our lifetimes. So it's difficult to look back and find tangible, concrete examples. But we know that private-public partnerships in the past have built entire highway systems. We know that the America's infrastructure is crumbling. And we know that working with the private sector, public funding could be creating jobs in the private sector, generating increased aggregate income instead of, excuse my French, pissing taxpayer money into the wind. And that's all that this is doing. But we know that public monies can be allocated wisely, conservatively, and in a way that creates increased incomes throughout the economy. And it is no secret anywhere that our airports and that our highways and that our bridges and tunnels are a mockery for emerging markets, to say nothing of developed economies. We can't get a train to run on time in the United States. So there's plenty that can be done with the assistance of the US government that benefits the private sector and puts people to work. We don't need to pay people to not work. We've done that for years. There's enough of that.
Final point, you're dropping a lot of truth bombs. I know you're bringing more. We're both going to be at Rick Rule's show in Boca Raton in July. We hope everyone will come and join us there July 7th to the 11th. Obviously, it's a show focused around, it's gold. It's a gold show. If you're a gold or silver investor in the mining space or physical gold, you definitely want to be there. What do you make of this, as we're speaking, silver run and still gold run here, Danielle?
Look, we're in an environment, and we have been in an environment, and now the Senate, the US Senate, is telling us we're going to get stuck in this environment because the way they see this big, ugly bill passing is completely different than how the US House of Representatives sees the legislation passing. Why do I bring this up? Because we've been mired in an uncertain environment for months now to the benefit of precious metals. And the dysfunctionality of the US Congress is telling you that we're going to be stuck in an uncertain environment going forward as well. And that the tariff policy is going to continue to foment uncertainty. Yes, President Trump got on the phone with Xi Jinping, all good and well. Let's see how long they actually take to make a deal. Because if you're looking at 2018, 2019, it took years. So the longer uncertainty prevails, the longer investors need to have a true safe haven that is completely divorced, removed from any other asset class. It's why precious metals have been outperforming, and it gives you reason as to why they should continue outperforming. Uncertainty, period.
Making a lot of sense, as always. Danielle DiMartino Booth, I look forward to seeing you in person.
Likewise.
The humidity will kill my hair, but
anyhow.
Happy to see you there, Danielle. And thank you all for watching. We'll have more great content headed your way, so be sure to stay tuned to the Daniela Cambone Show. Thanks for watching.